Okay, let's take a moment, look at the disclaimer. This content is for educational, informational, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We're here just to tell you how BTA look at the market, how we analyze the markets, but nothing should be taken as a recommendation. This is Rod from BTA, and we are known as the middle traders. Okay, this is going to be part 3 of our weekly Bollinger Band, and we're going to finish this up looking at the IWM and the ITOT. These are the last two major market index ETFs that we're looking at for our Bollinger Band strategy. Okay, so now right now you're looking at a weekly chart of the IWM, and this is probably gonna be a lot shorter than the last two because we don't have to go over a lot of the things we went over on the first two videos, the spreads and all that other stuff. So here's our pivot point for the IWM. Okay, just like we talked about in the last videos, that's our pivot point. Let's put a horizontal line right across our pivot point. Okay, the close and the pivot point for the IWM, the close of that, the signal week, and the pivot point for the IWM is 187.64. Okay, 187.64. That's our pivot point for the IWM. We closed at 187.06. Okay, so from 187.64, which is our pivot point for the IWM, we closed at 187.06. So we closed almost right on the pivot. That's great. The spread of last week is kind of tight also. That's good for the IWM. It's only $5.87. Okay, the spread is $5.87. So that's our risk. If this trade goes against us, that's our maximum stop loss, our out. Okay, we're going to be losing. It'll be $5.87 on this trade. Now, the low, which is our maximum stop out level for the IWM, is 181.77. So from the pivot point to the low, our second stop, our maximum get out. Okay, the spread from the pivot point to that low, the spread is $5.87. Okay, and we know according to our trading plan, we know that we're using the prior week, each previous week's low. Okay, we should never close below the previous week. Okay, that's our maximum stop for our strategy, right? So the spread is $5.87. Okay, but of course we're gonna look at these moving averages on the weekly chart because just because we break above the pivot, we got to watch that 8-week moving average, that 13-week moving average, and the 50-day moving average on the daily chart. But before we go into that, let's look at the RSI here, or for the IWM on the weekly chart. You see, we started trading up. We never really got toward the 50 level, which is our horizontal line on the IWM, and we're starting to flatten out. At least the stochastic down below, we got our bullish crossover. We got above 20, and they are pointing up a little bit. Okay, that's great. So the stochastic is telling us that we're closing higher and higher within our range. Okay, but the RSI is telling us that the momentum is starting to slow just a little bit. We want this to get close to the 50 level and try to get above 50 because that's telling us that the buyers and the bulls are taking control of the momentum. The stochastic is telling us that the prices are closing higher and higher within this range and they're pointing up. That's great. The MACD histograms here, look at the histograms. They are getting smaller and starting to get toward the zero line. And the MACD line right here, the brown line, is starting to get closer to its downward trending signal line. That's good. But still, price is the only thing that pays. All right, so we see momentum slowing, okay, on the RSI. The stochastic getting a little better, but kind of flat, a little better pointing up, but not really surging up to the 50 level. But price is the only thing that pays, right? Price is the only thing that pays. So let's analyze the price action. So right there, we know what our pivots are at. Okay, the pivot point for the IWM, okay, is 187.64. We close at 187.06. All right. Let's see what the weekly moving averages are looking like. Okay. Let's see what that 8-week moving average is looking like, okay? So now for the IWM, this is our weekly chart of the moving averages. Let's expand this. Let's zoom in on this so we can see it a little better. All right, look at that 8-week moving average. Okay, that's better than what we saw on the Qs. That's looking more like the DIA and the SPY, okay? The 8-week moving average is actually below the pivot point, okay? The 8-week moving average, this green line, is actually below the pivot point. So if we break and close above the pivot point, then we'll be closing above the 8-week moving average. That's good. That's what we saw on the DIA and the SPY. It wasn't like that on the Qs. Go back and look at part 2. So here, the 8-week moving average is 186. Our pivot point is 187.64. The 8-week moving average is 186 right now. So if we break and close above the pivot, then that is gonna already tell us that we're closing above the 8-week moving average. Okay. So now we got to watch out for this downward trending 13-week moving average, which right now, this downward trending 13-week moving average is 192. So if we hit the pivot at 187, okay, on the IWM, okay, we got about $5 to the downward trending 13-week moving average, which is right around 192. Okay, now let's step down. So we know where our overhead resistance is at. Basically, on the weekly chart, we're above the 8-week moving average. If we clear the pivot and close above the pivot, we got above the first hurdle that was giving us a lot of problems last week, which would be a close above the 8-week moving average. Okay, we just a few pennies from a close above the pivot, right? We got support. We found support at the 4-week moving average right here, and down below, down here. This is great, because that 200-week moving average is well below it, and price has been trying to bounce off of that 200-week moving average here, okay? The 100-week moving average is way up top, all right? So we got a long way to go before we get the 100-week. The IWM really fell apart pretty hard, so we got all the way down to the 200-week moving average. But what we're concerned with right now, because we'll never make it, we'll be way out before we get back to 200-week, so we don't have to concern ourselves with that too much. We just watching the 8-week moving average and the 4-week moving average, okay? And we start breaking below the 4-week moving average, which is the low of last week's. It's pretty much near the low, okay? The 4-week moving average is 182. The low for the IWM last week, I was out, get out no matter what, is at 181. So we right there, okay? The 4-week and the low of last week's trading range is right there at the stops. That's good. And we know the spread is $5.87. Okay, but the overhead resistance. So if everything work out and we get into trade and we hit the pivot, if the volume and everything is coming in and we get into the trade, we know we got to look out for this downward trending 13-week moving average, which is around 192.58. It's about $5 some change above price. Okay, now let's step down to the daily chart and look at the daily chart of the IWM, okay? And let's see where that 50-day moving average is at and that 21-day moving average as support. Look at the 50-day moving average. The red line, the downward trend, the 50-day moving average. We got to watch it, okay? Look at that downward trending 50-day moving average right here. We can trade up to that and bump our head and get rejected. That's at 190, okay? That's at 190. The 50-day moving average right here, that red line, is at 190, all right? We need to be careful of that. Let's go back to the weekly chart and see where that 13-week moving average is at, and that's at 192. So the 13-week is at 192, but we got that 50-week moving average. That's that 50-day moving average, that's at 190. So if we take the pivot at 187.64, we got the downward trending red 50-day moving average that's at 190.66. So it's no longer about $5 before we can hit that overhead resistance that can give us some problems, because we see the 50-day moving average, this downward trending 50-day moving average, can do that. That can be an area where we could bump our head on that and get rejected, okay? So the downward trending 50-day moving average is at 190. The pivot point, 190.66. The pivot point is at 187.64. So we talking about almost $3 instead of $5 going back to the 13-week. It's really $3 going back to the 50-day moving average before we where we might find a real key resistance level. We could trade up to that, maybe break above it a little bit, consolidate, and fall apart. So if we take this trade at the pivot, okay, just like we saw on some of the other ETFs, we only have $2, $3, $4 before we're going to come into some serious overhead resistance, okay? And we could get rejected and it starts pulling back. And like we said before, if it does get rejected and starts pulling back, and we start breaking back below the pivot point, breaking back and closing below the 8-week moving average, look, okay, and breaking some of those long-term weekly moving averages back to the downside and already being back below the pivot point, then we spoke about it. We might not even have to wait until we get back to the low of our maximum stop get out low point of the low of the previous week. For the IWM, the low of the previous week, our second stop loss is 181.77. And look at the 9-day moving average. It's at 180. Right now it's at 184. The 21-day moving average is at 183. So to get all the way back to 181, which is the low of the previous week, is our maximum get out stop loss, we'll have to be breaking through the 21-day and the 9-day. So you'll have to come back below the pivot point, break back below the 8-week, come back below the 9 and the 21-day moving averages on the daily chart. Look, all of that start happening. I mean, it'll be clear that this thing is probably not going in the direction that we want, and it is probably going to the downside, and that'll be our cue to start getting out. So we have to watch the key support. We got overhead resistance. If we break the pivot, we got overhead resistance looking right at us. Okay, $2 or $3 above that. You know, depending on how the volume look when we break above the pivot, we might have to wait until we get above the 50-day moving average, the 13-week moving averages. And the same thing goes for the other ETFs. Y'all know that. We're going to be watching that volume all week before we pull the trigger, okay? So, and we're going to be looking at lowest, of course. Lowest is at right around 183.91, okay? So we start breaking back below lowest, we know it's a problem. Our second stop loss is 181. Lowest is going to get us out about $2 before that probably. We start breaking back below lowest, you know, okay? That's going to give us the cue to say, hey, it's time to go, okay? So that spread is going to be a lot tighter, okay? That spread is going to be a lot tighter because we're breaking below the 9 and the 21-day and breaking below lowest. Then we don't have to wait until we go all the way back to the low, okay, of the previous week. We don't have to wait until we go all the way back there. We're going to be out way ahead of that, okay? So this is actually the way we like to trade. We like to have situations where our maximum stop loss is maybe $5 or $6, but we're going to get out way ahead of that. And we got a lot that's going to get us out before we hit the low of last week, okay, which is our 187.77 level on the IWM. We got a lot that's going to get us out before that, okay, breaking below lowest, breaking below the 9 and the 21-day moving average. You know, it's a lot going to get us out earlier than that. We're going to be watching it. We're going to be watching this very carefully all next week, okay? And we'll be giving updates all next week. And you know, if we do something, we're going to let everybody know. But we watching right now the volume, the pivot point, getting above these key moving averages. We know if we take the pivot, if we take the trade, if the volume and everything is coming in, we got these longer term key moving averages, 13-week. We got the 13-week. We got the 50-day moving average. All of that is right there giving us a problem. And don't forget, we haven't even looked at the price structure. You see, we got on the IWM at 188, okay? We haven't looked at that yet. We'll be talking about that next week. Look at the price structure. On the weekly chart, we got this here overhead resistance that we couldn't get above even on the signal week or the pivot week, we couldn't get above it. And that's at 188.09, okay? 188.09. So we'll be watching that, okay? And so to hit the pivot, okay, hitting the pivot at hitting the pivot for the IWM at 187.64, you know we're going to be watching this here overhead resistance right here that we could not close above for the last 2 weeks at 188.09, okay? And then we got this downward trending trend line right here that can act as overhead resistance. So we got a lot to be looking out for on this IWM, okay? You see all of this, all right? Besides the moving averages, but we'll be getting into the structural charts later. We got this overhead resistance at 188.09. We couldn't get above it and close above it for the last 2 weeks, okay? And then we got this downward trending internal trend line right here. That's going to be right above it. So all this stuff we'll be watching next week. But for this video, what we want to do is just keep an eye on the key moving averages, okay, and the price, okay? Key moving averages and the price action for the IWM. We went over it already. We're going to be watching it. Let's see what happens. If we hit the pivot, if volume is coming in, if everything else is looking great, okay, if everything else is looking great, then maybe we'll take the trade, right? But look at the downward trending 50-day moving average on the daily chart of the IWM. That's not good, okay? Look at that red line. Downward trending, the 21-day moving average is squeezing price into the downward trending 50-day moving average. Go back and look at our videos we did on analyzing the major market ETFs and analyzing walking with the market, okay? We talked about all the squeezing of the moving averages, the downward trending 50-day moving averages, squeezing of the moving averages, the money flow and the other indicators starting to show weakness, okay, in these key index ETFs. We talked about that. So listen, be careful, all right? But we're going to be watching everything moving, and we won't be pulling the trigger next week until we go over everything. You know that. We're going to be looking at everything before the trigger is pulled. But right now, we're just looking at the moving averages. So you see what the levels are for the IWM. All right, let's go back, and now let's look at the weekly chart, and let's finish up with the ITOT. Okay, this is the ITOT, all right? And let's finish up with the ITOT. So here's the ITOT, the weekly chart of ITOT with our Bollinger Bands. Here we go. You see the price spread last week was kind of tight. Here it is. Let's put a horizontal line right across price. The pivot point right around this area right here. Close enough, okay? Now, for the ITOT, the pivot point was 92.33. That's the close of the signal week, 92.33. We closed at 91.32, all right? So we got to get above this pivot point right here, okay? We got to get above this horizontal line right around the pivot point. That's right around the pivot point, which is 92.33. We closed at 91.32, all right? Now, we know that the ITOT is a less volatile ETF. This is the Standard & Poor's Total Market ETF, U.S. Total Market ETF, tracks the total market in the U.S. We know that it's less. The ATR is a lot less. It only moves $2 or $3 a day, up or down $2 to $3 a day. So the pivot point is 92.33. Once again, the low of last week, okay, which is going to be our get out no matter what second stop loss is $90.28. That gives us a spread of $2.05. Okay, so we got a maximum loss. Our risk is $2.05. If everything works out, we get into the trade. That's the most we're going to lose on this trade. So now here's the 50 level for the RSI. We got above 30, started heading toward the 50 level, but look at it. It started fading out a little bit. Okay, we need to get above 50 on the RSI to show that the bulls are taking control of the upward momentum. Here, down with the stochastic down here, we got our bullish crossover, and it got back above 20. But look, the upward movement is not really thrusting to the upside. It's kind of moving up and sideways a little bit. We at 29 right now. We want to see that get above 50. And the MACD it's a long way from a crossover, okay? It's a long way from a bullish crossover on the MACD, showing us that the momentum may be coming in very strong. Let's look at the moving averages now. Let's look at the moving averages now on the ITOT, and this is very interesting. If we look at the moving averages on the ITOT, all right, let's expand this and zoom in. Okay, as you see, we're gonna wait on this one. All right, we got to get above the downward trending 8-week moving average. We see that that's the green line. All right, well, we know if we hit the pivot, you can already see that the 8-week moving average is below the pivot. The 8-week moving average right now is at 91.32. The pivot point is at 92.33. So we clear the pivot point. If we close above the pivot point, we close above the 8-week moving average. Okay, that's good. But now we got the 100-week moving average, which is also right overhead. The 100-week moving average is a little higher than the pivot point. The 100-week moving average is at 92.69. The pivot point is at 92.33. Okay, so the bottom line is this. Even if the price breaks the pivot point, we're definitely not going to go into this trade until we clear and close above the 100-week moving average, which is this magenta purplish looking line. We got to get above that. That's key overhead long-term resistance, 100-week moving average at 92.69. We got to get above that. Okay, we got to get above 92.69, and then as we trading above it, we got to look out for the downward trending 13-week moving average, which is at 94.73. The downward trending 13-week moving average is right overhead. That'll be about $2 from where we get in at if we close above the 100-week moving average. So we got about $2 before we come into some really strong overhead resistance, which is the 13-week moving average. Okay, and as you can see with the volume bars down below, the volume is constantly getting lower and lower, okay, over the last 3 to 4 weeks. That's not good. We want to see that volume coming in when we're breaking above these levels, okay, telling us the institutional large investors are buying into this thing also. Now we got support of the 4-week moving average right at the low of last week, so that's good. Okay, that's good. So let's look at that daily chart to see where that 50-day moving average is at, right? Let's see where that 50-day moving average, that overhead 50-day moving average. Well, we already know, no matter what, we won't be making a move on ITOT, okay, until we get above the 100-week moving average, which is at 92.68. It's not happening until we get above that. That's for fact. Okay, so now let's look at the daily charts and look at the overhead 50-day moving average. It's kind of far. It's at 94.39, and our weekly 13-week moving average is at 94.73. So it's right there with the 13-week moving average. The 50-day moving average is right there. That's what we have to look at for that overhead resistance. If we get above the 100-week and we hit the pivot, get above the 100-week, we know it's about $2 before we get to that downward trending 13-week moving average and that downward trending 50-day moving average. Let's go back to the daily chart one more time. Okay, bingo. All right. Now we can see here that the 21-day moving average and the 9-day moving average is right below price. Okay, look at that yellow 21-day moving average and that green 9-day moving average. It's right below price. It's right around $90.70. Our second stop loss out, no matter what, is at right around $90.28. Okay, on the weekly chart, the weekly low of the previous week, okay, is right around $90.28. The 21-day and the 9-day moving average is $90.70. Let's go back to that weekly chart and look at it. Here's the Bollinger Band strategy, right? Here, the low of last week is right around $90.28. That's the low of last week, right around $90.28. Well, the 9-day moving average and the 21-day moving average on the daily chart is at right around $90.70. So we start closing below the 9-day and the 21-day. We're going to be right at the low of last week, which is at $9.28. So all of the support is once again right there together. So we're seeing that on all the major ETFs. The ETF that tracks all the major indexes. We got support right around the 9 and the 21 day, right around the low of last week. We got key moving averages for support on all those indexes also, ETFs. We got overhead resistance at the 13-week and the 50-day moving averages. So we see it. When one thing we do know that's a common denominator amongst all of them, okay, is that if we look at lowest, okay, all right, lowest is right below price and right near our stops on everything. Let's go to lowest for the ITOT. It's at $90.64. Our second stop loss, get out is at $90.28. Everything is right around the 21-day moving average. Lowest is right there and right around our maximum stop losses on everything. So basically, if we break below lowest on any of these ETFs, we're gone. Okay, she's going to get us out a little earlier on some of them, and she's going to get us out right around the same point where we would have got out for our maximum stop loss on the other. So lowest is definitely, we start closing below lowest, it's all over. We're out on any of these ETFs. That's a fact, okay? And we know we got to watch these longer term key moving averages, okay, on the daily charts, okay? We got to watch these longer term key moving averages on the daily and weekly charts. So that's it, y'all. That's it for the Bollinger Band Strategy. We'll be keeping an update on it all next week. We'll be watching all the support levels, key support and resistance levels, the trend lines, the structural charts, the moving averages, the volume. We'll be watching it all next week. Before we pull the trigger on anything, we'll be going through everything. But now, at least, we got an idea on where our price levels are at for our moving averages and our longer term weekly moving averages, longer term daily, intermediate, daily moving averages. We got an idea where lowest is at. We know what our risk is. We know what our risk is, our spread, our risk is on the trade. So we got an idea. We got a setup here. We got an idea of what's going to happen for next week. We got an idea how we're going to move forward next week. So like I said, this is not a recommendation at all. This is just let you know how we're going to be looking at it, what we're going to be doing. You can watch behind us, paper trade it, see how we perform. We learn from the old timers. We got successful trading strategies here. We talk about it every week on our weekly meetings, okay, on Mondays and Thursdays at 5 o'clock on browntradingacademy.com. Look, it is what it is. This stuff works. It's been working for 100 years. I don't think it's going to stop now. But like I said, this is not a recommendation. But we will be monitoring this thing all next week. So that's it for the Weekly Bollinger Bands. This is part 3. We're done with that. Now we'll just be monitoring it all next week. All right, so take care. Hope everybody have a good weekend, and talk to y'all in the next video.